Don't wait, invest now. A Beginner's Guide to Long-Term Investing. Sponsored by the Motley Fool. The stock market can seem daunting to beginner investors. The reality is that it's not that hard to get started with stocks, and you don't need any special training or expertise in financial statements to begin investing in stocks. All you need is some basic information on how the stock market works, an investing strategy tailored to your financial goals, some money invested, and patience. It's important to understand that stock investing is not gambling. It's about putting your money into a diversified portfolio you believe will provide you with wealth over time. Define the aim of your stock investments first. 4 simple rules we follow. Number 1. Build your diversified investment portfolio over time. Number 2. Invest regularly, at your chosen frequency. Number 3. Ignore short-term market movements by staying invested no matter what. Number 4. Treat your brokerage account as a long-term investment, at least 5 years. Why dip your toe in stock investing? Whilst it has experienced many downturns since its inception, some lasting years, the stock market has always bounced back. Whilst past performance is no guarantee of future results, it offers one of the highest historical returns compared to real estate, gold, or treasuries. Will I lose money investing in stocks? That's a recurring question, and everyone must evaluate the risks before any type of investment. Give your investment time to grow. When you buy an individual stock, you believe the company will do well. But, in most business cases, it cannot triple its turnover overnight. Just ask yourself, will the company be bigger in 3 to 5 years? If the answer is yes, then your shares should go up. With this method, you don't need to get into active trading. Just buy a share and hold on to it. Do your research though. This only works if you selected a solid company in the first place. Work on your asset allocation to build a diversified portfolio over time. The advice, don't put all your eggs in one basket, certainly applies here. When you invest money to grow your retirement accounts, for example, you want to ensure your life savings don't rest on the success of a single company. Some invest all of their money in the next big thing. This is extremely risky, and beginners should stay away from this method. A few ways to invest in stocks. 1. A traditional brokerage account, or full-service brokerage, allows you to talk to someone who can offer advice on investing. 2. An online broker may be enough to get you started. 3. A robo-advisor uses algorithms and artificial intelligence to make investment recommendations. How to invest in the market with no money. No commission stock accounts are recent, but they change everything for first-time investors. 2 options you can consider when starting with a small budget. Number 1. Fractional shares. This is a stock investing revolution. You'd love to invest in Company A, with a current share price of $500, but you cannot afford it. You can now spend $100 and own 0.2 share instead. This is a great way for first-time investors to gain exposure in the market without having to spend thousands. Number 2. Consider investing via an employer-sponsored 401k plan if your company offers one. With these plans, employers typically match part or all of their workers' contributions. This is a great benefit to take into consideration when comparing job offers. Being an investor, work on yourself. For those who don't know exactly how they will react to the market's ups and downs, it may be best to start small with broad index funds and monitor it for a few months. However, if you're pretty confident that you can handle a little more risk to potentially get higher returns, then perhaps start building your portfolio with individual stocks. Knowing whether you're prepared for all this is part of what defines an investor. Figure out what kind of investor you are. This means knowing your limits, goals, and time horizon. It also means knowing your risk tolerance, investment philosophy, and whether or not investing is something that makes sense for you. Work on your asset allocation to build a diversified portfolio over time. Stocks are a great way to invest in the future of a company, the future of a country, and the future of the world. Shares are an excellent way to invest in your life. David Gardner, the co-founder of the Motley Fool, once said, "Make your portfolio reflect your best vision for our future." Stay informed. The stock market moves fast and there are always new opportunities emerging. So make sure that you stay updated with what's happening in the world of finance. No time to research companies to invest in? Then you're in good hands with the Motley Fool Stock Advisor service. Join over 500,000 investors, who, like you, are on their investment journey. Stock Advisor members gain unlimited access to a library of expert stock recommendations inside the service, each carefully aimed at multiplying members' net worth. Members also receive new stock picks each month from their flagship service. Stock Advisor's recommendations have beaten the market over the past 20 years by staying true to their investing philosophy. Check the link below for an introductory offer for new members. Now that you are familiar with the world of stocks, it's time to start investing. We are confident you'll enjoy a successful investing journey if you follow these golden rules. ControlAllFinances.com